One of the great quotes I heard this year was AI built on bad data is just bad AI. And so I think that's one of really the elephants in the room. We want to use all these AI use cases, but fundamentally you need to get the data management right, security right around how you're sharing the data. You need to understand your policies, your procedures, and the technology, everything around that to be comfortable with these AI use cases. Another of the inflection points that we saw was last year, they were very interested in AI applications for customer engagement, right? We're going to have robo-tellers that are AI powered, and you're going to have marketing schemes that are built by AI, and a lot of these different changes. And a year later, they kind of came back and said, we actually don't want any AI interacting with our customer base. We're not comfortable with that yet. We're first going to test it out on ourselves internally. And so a lot of the AI applications, what multimodal is very focused on is much more around how are our employees using AI? How are we making our employees more efficient in testing out the AI use cases internally before ever having that being more external facing? So I think that's another theme that we're seeing in some of the maybe sobriety in the room around AI applications is much more on the data management, getting it right, security applications, getting comfortable with the risk profile of it before moving externally.
Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Welcome back to Pioneers. I'm your host, Ankur Patel, and today's guest has a front row seat to what's actually working and what's not when it comes to innovation in financial services. We're joined by Giancarlo, a FinTech executive with deep experience in how banks, insurers, capital market firms, and payment providers adopt and scale new technologies. From blockchain to digital currencies, from AI to security, Luke has been at the heart of it all. And we've had the pleasure of working alongside Luke during our time in the FinTech Innovation Lab, where his insights helped guide our work at Multimodal. So Luke, welcome to the show.
Ankur, thanks so much for having me, man. It's been fun working with you over the past couple of months with the FinTech Lab. And now that you're on the other side as an alumni, it's great to have you back and talk about what we're both seeing in the FinTech space.
Luke, could you just explain your role as director of FinTech Innovation Lab? What does that mean for the program?
Yeah, thanks. So I wear a number of hats at Accenture, actually. I'm part of what we call our innovation incubation practice. And so we focus on new emerging technologies like blockchain, AI, quantum, whatever it might be. And we really help spend the time to upskill our teams on what those innovation topics are so we can better deliver for our clients around those topics. And so as part of that, my main focus is running the FinTech Innovation Lab, which is an incubator program that cooperates with about 40 different financial institutions across payments, banking, capital markets, and insurance. And they're all large legacies, financials, those tier 1 giants in financial services. And every year we sit down with their executives to understand what are their innovation priorities. What are they thinking about around AI use cases or blockchain use cases, crypto, quantum, sustainability, whatever it might be. And year over year, those priorities change, but we take those priorities and we go out to the market and we try to find startup companies like yourself that are solving those challenges. We bring them in. It's a competitive process. You went through it where we have Shark Tank days and demo expos and paper-based applications, and you're rated by those financial institutions and their executives. So as you make it to the next series, you are judged by those financial institutions and they take that feedback. And then we match you up with those financial institutions over the course of 3 months to give you product targeting with those executives to help you refine your product. And for us at Accenture, we use that to really identify what are the problems that our clients are dealing with in financial services? What are some of the leading companies out there and how are they creating solutions for those clients? And then we try to partner with those startup companies to help be better prepared to be more innovative with how we're building services. So my role at the lab is really to run the program, but also to find innovative companies and help build partnerships and incubate those areas of business for the firm.
It's a very difficult job, I imagine, just given the number of startups are out there in any given category, and then trying to figure out the ones that are best suited to be matched with the financial institutions, right? And the other big challenge that I see, and maybe you could speak to this, is the innovation trends vary year by year, right? I'm sure sort of years you've had companies that were just all blockchain and crypto, or primarily blockchain and crypto. And it feels like this year, it's all AI or even agentic AI. But how do you keep it from being like just like basically like buzzword of the year versus driving real traction for these financial institutions?
Yeah, you hit the nail on the head for us. We get hundreds of applications that we sort through every year. And I wish I could say I was the one that went through them all, but really it's the financial institutions who are voting on them and down selecting them. So you're actually getting the voice of the industry as they review your applications for what's leading, what's not. But what I've seen be really successful is how can you articulate a business problem and how can you create a business solution to solve that problem? And that really is what differentiates the hundreds of agentic AI platforms that we're seeing out there is how are you actually identifying a real problem, a real business problem that reduces either time or money for the companies, right? And so if you can be eloquent in how you're solving that problem, that really sets you apart as a startup company. There's a lot of great technology out there, but if you can really solve a problem, that's what sets you apart.
Yeah, I mean, I think that makes sense, especially now when there's so many AI companies, like of all shapes and colors. It's a matter of figuring out like why are the few AI companies you want to chat with the companies to work with, right? And I imagine it's very hard as a buyer, right? So they're trying to get a lay of the land and learn along the way. It's something that, and I think it's a really interesting two-way conversation. Because as startups, like you have all these questions that you want answers to, as you go build product and you get your go-to-market motion underway and you scale that you otherwise wouldn't be afforded the time and opportunity to ask. And then financial institutions want to learn about the newer technologies, particularly if they're startups and founders that have thought deeply about that particular topic at hand, right? Because they want to get informed. They want to go and introduce the rest of their company. There's a good two-way sharing of information. And I think that's what I've seen FinTech Innovation Lab really excel at is like really partnering companies with startups where there is more like frank conversations are had, not in like a one-off way, but what I've seen is like through our participation in the program is like you get very deep in these conversations with multiple parties who are very senior at these financial institutions. It's levels of access that would be near impossible for you to get if you were on your own.
Yeah. And I mean, Ankur, you saw this, right? But people, they don't buy technology, they buy solutions, right? And I think even with your platform, you're trying to help companies understand how to take AI solutions and how to apply them to real business needs. And to your point, the FinTech Lab is a great way to really understand what are those challenges and then how do you actually embed your technology to solve those problems.
Yeah, it's remarkable how crisp your thinking becomes when you actually understand how the businesses that you're trying to sell into describe their pain point, right? And so for us, like one of the things that really got crystallized as we went through the program was the need to go and capture this expertise that is in people's heads, right? Think like underwriters and adjudicators that have been working for decades in insurance as an example, where they have such deep expertise on doing their work, but they're a finite number of individuals, many of whom are about to retire, right? And so there's this like generational gap that's about to happen, demographic changes. And I think what we've learned is like agentic AI, at least in these areas, is going to be very helpful in capturing and scaling up that expertise. So you could go and handle that demographic shift, right? From older workers who are retiring to more junior workers who are coming online. It's allowing these teams to, for the first time, distill that expertise in AI that is scaling up basically that expertise that was finite in nature, right? And it's a very important realization to be able to identify like that's the pain and struggle that you can't just slap AI on to a lot of this. You need to be able to figure out like how to go and work with the present problems these businesses have to, again, sell solutions as opposed to just selling a technology. Look, obviously innovation seems to be happening faster than ever before. It feels like the cycles were getting shorter. There's just like there are a lot of builders and operators in the space. There's a lot of venture capital here. Even that financial institutions, I've never seen them exercise so much like FOMO. Essentially, they're adopting AI far faster than they have adopted previous technologies that have emerged. So what do you think is behind that maybe speed to adopt and innovate in a way that's never existed before?
Yeah, it's interesting. And I don't, I'd be careful to say like never existed before. And it's funny, you and I sat down with David Solomon as part of the lab, and we got to hear his thoughts and reflections from a long journey as being the CEO of Goldman. And he talked a lot about different innovation waves. And he personally kind of felt that AI is just another one of those innovation waves that we're going through. Then AI itself has been around for a while, right? It's gone through maybe different definitions from machine learning to now AI and agentic, and it's gone through different iterations. But the idea behind it has really been there for a while. But I'm with you on the idea of speed, and I think we're seeing a lot more momentum in the space. I mean, and obviously that's come out of the boom of ChatGPT and generative AI that has really changed the narrative. But I think part of it is as well just the ability to create solutions so much faster, right? That you've got now vibe coding and the ability to create agents overnight that are really solving unique problems, and also the flexibility of these agents to be able to solve different types of problems with similar code that can be shared across. And then also just the development tools and the tech stacks are more flexible and better suited than ever before, with like modular architecture, cloud-based development are really driving kind of more efficient ways to create solutions in the market. So I think it's a combination of factors that is really driving the speed. But I think there's also just a bigger appetite for not just new business solutions in the market, but also modernizing very old businesses. And financial services is one of the oldest industries that's out there. And I think they've gone through multiple iterations from paper-based to message reconciliation and data businesses. And now AI is very much changing the fundamental way that they are providing data-driven services for their clients.
I love that distillation. I think you're right. It's a combination of different things are happening simultaneously. The sharing information super fast, again, because it's web-based, it's social, you get information from multiple areas. So any new innovation, the information gets shared pretty quickly. And then I think there are such good technologies, cloud-based technologies. Vibe coding is a great example where people are just building far faster. They can prototype something built very quickly. And so you're seeing the compounding gains from that speed of gathering information, learning about a new thing, and then being able to put it into reality. And I think that's what's maybe different, not the fact that there's new technology. There's always new technology that comes about, but the speed at which technology is getting propagated is pretty fascinating to see.
Yeah.
I'm curious though about the temperature of the room around big, large financial institutions. Again, massive budgets, very large engineering teams. They're not just like financial institutions of old. They in many ways resemble modern software businesses. How much of the new innovation that's happening around AI, as an example, are they choosing to do on their own with their own teams versus like being open to working with startups, right? Startups of different vintages, both like startups that have been around for like 2-3 years, as well as startups that are maybe are like longer in the journey, 7 to 8 years, right? So I'm curious, like, is there an appetite to work with vendors, or is the mentality today more, build it on your own?
Yeah, and this answer is going to be old in 6 months once people are watching this video again, because I think that appetite changes really rapidly, and we've seen it gone through a number of iterations, especially with our Accenture perspective as well. Right now, I think you're right. I think we're in much more of a build it yourself phase, but I think we're starting to see a bit of the horizon on that, and people are looking again. You almost can't keep up with the speed of innovation. To your last question, and so startup companies are creating really fascinating point solutions and solving those very quickly. And so we're starting to see those either being acquired by legacy financials or being, we call them a string of pearls, where you've got a number of those point solutions that you're packaging as one solution and bringing to our organization. And so there definitely is a big emphasis on build. I think we're coming out of in the past 8 years or so. But I think you're starting to see more and more, because of that speed of innovation, more and more of a partner appetite with large financial institutions. And one other thing I would say is you're absolutely right. Those financial institutions, they now look more like tech companies than they do financial bankers and analytics than ever before. But I think part of that is just really being driven by the speed of innovation from the other tech companies and the competition that you're seeing in the space from like Apple getting in the game of payments, right? And Google being a capital markets player, you're starting to see more and more of these legacy technology companies starting to enter the financial services game. So financial service institutions have to compete. And I think they're doing that by any edge they can, definitely through partnering with startup companies.
Yeah, we've seen a similar arc, which is 2 years ago, every enterprise wanted to build on their own. I think many still have that frame, but you're seeing a little bit of a thawing in that approach, which is like if they find startups that have like built something that they're looking to do deeply already, it's an illogical decision in some ways to spend $3 million building it custom on their own versus spending whatever, call it 6 figures with the startup to go and do, especially if they have a trusted track record of having done it for a lot of peers in their space. So I think there is a willingness to at least have conversations, if not actually start exploring and working with startups. But your edge needs to be very, very sharp, because if you're doing something that is a very thin wrapper on some model, these enterprises are so far above and beyond that, right? They have very sophisticated engineering teams. They experiment quite a lot. They build quite a lot. They have like the know-how. So your edge needs to be super sharp. It needs to be end cycles ahead of where their team is today in order for you to be have a viable opportunity at selling a larger organization.
Yeah, no, I think you're spot on. Spot on.
What about the use of AI among financial institutions like banks and carriers and such? What types of AI, right? Because AI can mean a lot of things. I'm curious, where are you seeing maybe more experimentation and adoption? And maybe equally, where are you not seeing a whole lot of innovation just yet?
Yeah, funny question. We look at such a broad set around, again, payments, banking, capital markets, insurance. And across all of these, it's a number of different innovation topics, right? Blockchain, AI, quantum, machine learning. And then even across all those industries, you've got enterprise solutions as well, right? Security is always key. Data management, infrastructure building, human resources, treasury management. So I think we're seeing like a new generation of fintech companies that are actually helping legacy financial institutions go to market faster. And so they're solving problems around infrastructure modernization. So this year's cohort in the applications we got, probably 30% fintech pure play companies, 20% insurer tech pure play companies, and 50% horizontal plays. So applications that could be in healthcare or financial services or high tech or whatever it might be. But for the lab this year, they're very focused on financial services. And I think that's a bit of a new breed of fintech, companies that are helping banks be more efficient, go to market faster, get better customer penetration. And so I think there's rather than the fintechs of old, of the Stripes and Squares that are trying to disrupt the financial institutions, are much more helping them be leaner, more efficient, sharpen their blade, as you say, to go to market faster. So for me, I'm really interested in kind of those companies that are really focused on reducing the hours spent for banks, helping their employees be more efficient. And I think it's a great point solution if you can help those banks in those areas.
Yeah, that's pretty interesting. It's like instead of competing directly with financial institutions, they're trying to enhance what the financial institutions have, right? And I think there's a very important distinction between the two. At the same time, you are seeing like the Stripes and the Ramps of the world at least nip at the Stripe up, of course, get very scaled, but rapidly growing Brex and others that are trying to chip away at some of like, let's say like Amex's territory, right? With card and payment management and spend intelligence and such. So I think what we see is like there's a need for financial institutions that have been around for decades to go and also innovate in ways that startups are. And so now they have the means to do so because they resemble more software orgs. And if they're willing to partner with startups, then they can, on their large distribution base, introduce technology and get to a much more impact, right? Because like Ramp's problem, for example, is getting enough distribution. They have a really good product, really good technology, but it's still hard to go and get market share. And for a larger player, like payments companies that already have distribution, their challenge is, can you go and enhance your product and technology quickly, right? Whether in-house or partnering with technology companies that can be a really good bolt-on to their distribution base.
Yeah, no, you're absolutely right. It's funny. We think of the hyperscalers as the Amazons, the Googles, the SAPs, I think you're starting to almost think about financial institutions as hyperscalers in themselves, and they're starting to acquire or partner with innovative companies in order to be more effective and have more of a wider range of services for how they go to market. So it's definitely an interesting paradigm that we're in at the moment.
What about blockchain, right? With Circle's IPO, maybe stablecoin being like a really killer use case that still is very much emergent and maybe even gaining more traction. What is the temperature in the room among financial institutions around blockchain?
Ankur, I've been just dying for you to ask me that question this whole time. I am a blockchain nut and purist. Before the FinTech Lab, accredited an organization called the Digital Dollar Project. That is a think tank that advocates and explores central bank digital currency and tokenized versions of the dollar in general globally. And as part of that, I led the first pilot program with the DTCC to explore how you would settle tokenized equities with tokenized cash. And so it's near and dear to my heart. I've really been hoping the FinTech Lab, we're going to have this renaissance again in the blockchain space. And I think we are this year. And so there's a number of areas that I'm really keeping my eye on for blockchain. In the past 6 months, I think it's really caught fire, caught wind in the space. So there's a couple different areas that I'm interested in. I think, first of all, to your point around the IPO is this idea of the Metcalfe law of having these network effects. And the bigger you can get the network, the more valuable the organization is. And I think that's how people are looking at USDC at Circle, as they've been first to really get that network effect as a stable coin, kind of apart from Tether. And so that's really interesting. And it's going to be challenging for banks to think about as well, around as you see these new players getting these network effects, how do banks protect their existing networks or partner with stablecoin providers to be able to protect against what they're losing on their balance sheet in terms of deposits leaving the banks and going on to these blockchain-based platforms like stablecoins. And so it's going to be a really interesting next year to see how we navigate this new paradigm that we're in. So blockchain is really fascinating for me. I think a couple of the areas that I'm really keen on is, of course, the tokenized assets for capital markets, like tokenized equities, tokenized repos, et cetera. Payments, and I could do a whole podcast on payments if you're interested. But for me, I mean, we at Accenture, we've been talking about the death of distance. And historically, you've always had financial institutions that act as messaging systems to send transactions, right? Think about cross-border payments. You've got the correspondent bank network if you want to move money overseas, and you've got all these participants in the middle to make that transaction happen, these messaging and reconciliation that goes on. And with stable coins, you can go directly from point A to point Z without having to go through all these steps in the middle. And that is a really different paradigm that we're in. And financial institutions are starting to think about what is their role in this new ecosystem with what we call the death of distance. So payments is going to get shaken up, but it also has ripple effects as well. So treasury management is another area that I'm really focused on at the moment. But how do corporates and banks modernize their treasury functions so that as payments start to speed up, they have the right back office functions to be able to support and handle those faster transactions. So I think it's going to be a really interesting space. And the last thing I'll mention on it is a convergence of blockchain and AI, which I think is going to be really fascinating. It's funny, they're almost a match made in heaven of, okay, one of the problems of AI is, if only we knew the provenance of the data, we had better data mapping tools, better data tracking and aggregation tools. Oh, well, there's a fantastic technology out there around data management, data sharing, data aggregation, which is blockchain. So I think the market's starting to realize how compatible these two technologies are. And I'm personally really interested to see the next generation of these technologies, how they're blending them more and more.
Yeah, I mean, I love that frame. It's clearly that you're very enthusiastic and informed about this space. I feel like I could learn a ton from you just here.
I'm a fintech nerd through and through, of course.
Yeah. I think stablecoin, it has had such good momentum. I think because of like some of the other things around crypto that, for example, just fraud incidents and such. I think there was a little bit of a setback, right? But stablecoin, particularly USDC with Circle, even Tether, like just given the adoption that's seen overseas, it was steadily gaining momentum. And then, like, I think now it's emerged as it's something that's become mainstream, right? It's no longer even on the periphery, to a point where the conventional banking system is like having to seriously think about how to go in and introduce this, and because it is both a threat and an opportunity for them, right? And I think, they're community banks, for example, like as the smaller banking players in the US, like they also face a challenge, which is like what happens to their deposit base? How does that shift? How do they go in and adopt this? So I think on one hand, like there was like new technology that is very exciting. A lot of people are enthusiastic about all the applications. On the other hand, in some ways, like the conventional banking industry is like, whoa, let's put on the brakes a little bit. Let's go and have like enough time and space to go figure this out. But I think there was so much serious attention from very large financial institutions on how to go and adopt stablecoin, right? Whether it's introducing their own through a consortium or adopting one that's already mainstream, but you're having like real conversations. It's no longer just like tangential.
Yeah, absolutely. And you brought up the fraud point, and it's funny. I've always feel like cryptocurrency was both the best thing and the worst thing to happen for blockchain as a technology. Right? I mean, of course, Bitcoin created and defined the technology as we know of a blockchain distributed ledger, but it also opened up all these other types of coins that have been ripe for fraud and speculation and are really kind of tainted the view of the industry. And I think it's helped us back in a big way. But the technology and the power of it is really undeniable. And I think financial institutions are starting to find better ways to do safe, resilient applications of this technology. So I'm more and more excited to see what comes of it. But yeah, I'll tell you, we are talking to a number of bank clients. The phones are ringing off the hook. It is absolutely going to be a hot topic alongside AI in the next year to come.
And it's funny how like it goes back and forth. Like, AI has been around for a very long time. Like to David Solomon, reference you made earlier, it's like been around for a very long time. But even in the last 10 years, like in the modern era, machine learning was always a thing until it erupted with ChatGPT because it became more mainstream. And obviously the technology has advanced far degree in the last 2 years. But these things like come in waves. Like at one point it was like very much crypto and blockchain, like really being at the forefront, took a little bit of backseat to AI. It may flip again, right? Quantum may be on the horizon. But from your vantage point, it's pretty fascinating because right now in the role that you're in, you see these innovation trends. You work with startups. You also work obviously with very large financial institutions to hear what's top of mind for them, right? And I think that gives you such a good read as to what's really happening in the room. So maybe let me go back to AI for a second. It's obviously the very, very, very hot topic of the year over the past few years. What are things that concern you around pitfalls around AI that perhaps we're not thinking enough about? And the reason why I ask this is because at the height of blockchain and crypto, NFTs, and everything else that like defined 2021, for example, no one was asking some of these hard questions around like what are the pitfalls, where could things go wrong. I'm not saying AI is analogous to that, but you always want to wonder what are the things you're not looking for around the corner that you should be aware of, that you should just have a more realistic lens on, right? Because it's not just all like optimism, things are going to be easy. There are going to be some very hard problems and challenges that come up. So what do you think some of those are or anticipate being based on your conversations with FIs?
Yeah, I mean, I hate to be the pessimist in the room if you're going to ask me to be so, but what I'll start with is last year FinTech Lab, when we interviewed those financial institutions in 2024 or 2023 at this point, they all said, we want to do AI everything. Give us any use case and we want to build it with AI. We want to streamline the whole thing. A year later, we brought in, these AI, build-in-a-box AI solutions. And after the lab of working with them, they came back and said, okay, you know what? AI is really hard to do. And we don't have the right data processes, data mapping. We're not comfortable with the data sharing. We don't have the right risk profile as well. We're not comfortable with the hallucination of LLMs to interacting with our customers. And they really pumped the brakes on AI. And I think this year we had a much more sober conversation. Quick aside, I was laughing. I'm like, you guys hired me to run a FinTech lab. Now I'm talking about data management and security.
Yeah.
It's boring stuff, but it's age-old problems. And I think they really need to get that right. And one of the great quotes I heard this year was, AI built on bad data is just bad AI. And so I think that's one of really the elephants in the room. We want to use all these AI use cases, but fundamentally you need to get the data management right, security right around how you're sharing data. You need to understand your policies, your procedures, and the technology, everything around that to be comfortable with these AI use cases. Another of the inflection points that we saw was last year, they were very interested in AI applications for customer engagement, right? We're going to have robo-tellers that are AI powered, and you're going to have marketing schemes that are built by AI, and a lot of these different changes. And a year later, they kind of came back and said, we actually don't want any AI interacting with our customer base. We're not comfortable with that yet. We're first going to test it out on ourselves internally. It's a lot of the AI applications, what Multimodal is very focused on is much more around how are our employees using AI? How are we making our employees more efficient and testing out the AI use cases internally before ever having that being more external facing? So I think that's another theme that we're seeing in some of the maybe sobriety in the room around AI applications is much more on the data management, getting it right, security applications, getting comfortable with the risk profile of it before moving externally.
Yeah, it's funny. It's like if you're doing any serious AI today, you're getting into all of the stuff that, as engineers, for example, you kind of, in some ways, don't want to be spending the majority of your time around data governance, model governance, security, right? All the hard questions. But that is going to be absolutely essential for AI to work in these regulated spaces, right? And so those are the right things to think through and work through and answer. I think it's a fine balance because like when we talk to business operators at financial institutions, they want to be inspired, right? They want to see what the art of the possible is. And so in some ways, you want to make it easier for them to prototype it, get excited about technology and what it's capable of doing. And then basically at the same time, be realistic, which is, whoa, like this is great in theory, but like here's all the things we need to solve for this to be robust and resilient and stable and, just well managed in the long haul. And so like, this is how like we're thinking about and have tried to solve for data governance or model governance and observability and having audit logs and execution logs and all these things that in some ways are like the very, very important, somewhat boring details, as some people may describe it, around like just getting AI to work in a space like this. So you need to find balance, but I think there's a lot more realism around it, right? And I'm glad that these financial institutions are in some ways focused more on like basically dogfooding it themselves before they introduce it to their customers. Because I think the bigger risk is, and this is like broadly across the space, is like you have a high profile incident where AI has a massive failure of some sort, affects customers, it hurts the reputation of a big brand, and then you have a fallout from it, right? And it can happen to like anywhere, like it's just, it can happen in one corner of the space. And all of a sudden the temperature in the room around AI can turn, particularly around the use of AI in certain like regulated
It's your
spaces.
FTX event, right? So.
Yeah, exactly. Yeah. And you don't know where it's gonna like where that shoe's going to land or like, like it's hard to go figure that out. But that's something that I think, we're very sensitive. It's like we want to be the more sober people in the room around how to do this well in this space in which use cases to identify. You cannot over promise and overhype AI. It's very easy to do so because people are already inclined because they, maybe they have some familiarity with AI from consumer experiences, and they're like, why don't we just do the same thing and like let's see how it goes? And it just doesn't work. Or there's a whole order of more complexity to solve for.
And Ankur, I think like with Multimodal, you guys have done a great job through the lab of really framing yourself as kind of that thought partner, right? Of being, hey, let's spend the time to really understand what are your problems, what are your concerns, and how do we make sure that we build these models in a way that really respects that as well. The other thing I'll say is when you and I were down in Washington, D.C., we met with a number of regulators. It's funny, I feel like a lot of the questions in the room were, how are you going to regulate AI? And a lot of their answers back to us were, well, we're not. We're going to be focused on like the same data safeguards that we always have been, right? And it's going to be focused on the outcomes-based approach around safety, soundness, and resilience for financial institutions. And they don't really care how exactly you're designing the AI models as long as it's protecting customers and upholding that same sophistication that you need. And so a lot of the conversations we had was, again, more on the data management, the data privacy, how are you protecting people's data, right? Rather than how you're designing these LLM sets. So I think that's where the focus is at the moment. And to kind of cut through some of the buzz and the noise is really focused on those core principles.
Yeah, I think that's absolutely right. Like I have previous startups that I used to run machine learning for, where we were doing things like anti-money laundering, cyber fraud detection. And I think this was a juncture like 2017, 2018, when I was primarily doing this, where you were starting to use machine learning models, particularly unsupervised learning, so finding bad actor patterns as they were emerging real time, because using historical patterns wasn't a good signal because bad actors keep changing what they do. And so if you can't find the real time changes in bad actors doing bad things, then you weren't really solving for AML in real time or fraud in real time. And humans just can't process that much data all at once, but algorithms can, machine learning algorithms. And so the challenge then was to explain to a regulator, like a central bank that governs anti-money laundering, around how that algorithm works, right? Ultimately, like why are certain things getting surfaced? Why are certain things not getting surfaced? And are you seeing better outcomes, right? That's ultimately what the regulators care for. And so that explainability piece, educating them around the use of this technology, how it's leading to better outcomes, that was really pivotal. And until that happened well, right, until that technology was handled well with regulators, it wasn't adopted in mainstream way. But like a couple of years after that, everyone was started using machine learning algorithms across the board, because at that point there was no way to solve for bad actor patterns other than using very sophisticated algorithms, because in some ways the bad actors are the first ones to leverage the technology. Then the good actors, the ones that are playing defense, have to basically introduce that same sort of firepower and be able to combat some of the bad actor behavior that's emerging.
Yeah, absolutely.
So let's maybe talk a little bit about, how does like the accelerator and what you do work, right? Like what are the things that you look for and try to solve for to make sure the experience both for the startups is a really great one, as well as the financial institutions that decide to partner together?
Yeah, and Ankur, you've gone through a number of incubators, and I'd love to have you answer this question afterwards around how do you think about what really makes it successful. But for us, and we really spend a lot of time make sure we get this balance right. I think it's a mix of making sure you've got the right partners in the room, the right mission of the program, and the right kind of ethos or outcomes that you're trying to get out of the program as well. And so for us, we're really focused on, we run the lab with Accenture, but also with an organization called the New York Partnership Fund. And they're a civic fund that represents kind of 300 largest employers in New York City. And they help allocate the time, attention, and capital of those organizations to advance the New York City and state community. And so they're a phenomenal partner. And they really have this amazing civic initiative to really help the startup companies get traction in New York, help the financial institutions that are mostly based in New York be better prepared and then sort of provide for their customers. And so you have this program that has these financial institutions, the civic organization, this like really great startup economy that's in New York City. And as Accenture, as an SI partner for the legacies and as this innovation partner for the startup companies, we kind of try to make the whole thing work and kind of act as this middleman between all those organizations. And so for us, it's really about the right partners and about the right mission and really having the right incentives as well. So as you know, right, we don't take any equity. We don't give any funding. No one that's involved in the program is paying to be in. It's all pro bono, and everyone's giving something more precious, which is their time, to really spend the time with entrepreneurs like yourself to really help you mature and incubate, et cetera. So to your question and what makes it well, it's having the right balance of the partners, the incentives, and the ethos.
Yeah, I really appreciate that, Luke. And I mean, we've been a part of a lot of accelerators, I think 6 now over the last 18 months. And, I think time is our most valuable asset, right? It's a thing that you want to make sure it's leveraged well. And, when you think about what you need a startup to go and really succeed, there's access to capital, but there are a lot of capital providers. I mean, that's what the conventional like VC industry is for, right? So you don't join a startup. I mean, you're joining an accelerator for capital. Accelerators are really around access to expertise, right? Particularly access to what I call information that you otherwise couldn't buy elsewhere. And so for us, that really comes in the form of having really frank conversations with exactly the customer base that we're selling into, these financial institutions. Understanding what's top of mind, what are the pain points that they're experiencing, not just at a business level, but even trying to solve for that through new technology like the use of AI. Right? What is top of mind for them? What's kind of giving them pause? It's about getting their candid feedback on what we've built, how we've built for these things that we're solving for, and what's on our roadmap, and are those the right items that really go and make a big difference to the business problems that they're facing. So that we're really candid two-way conversation, that access to the people that are going to be really informed and giving you their take, and having like what I call like a high touch, very tense period of time, because the accelerator goes by quick, right? It's 10 weeks, 12 weeks, like it's a pretty short time, but it's really intense. You want to make sure you form really great relationships that then even persist well beyond the accelerator. And I think the FinTech Innovation Lab was very thoughtfully curated, where you had in-person experiences, which are really important for building trust and relationships very quickly. But then you had good like touch points that were frequent enough virtually over Zoom or Teams, right? And then I think it culminated in like this big demo day, which helped you kind of see all the faces again in the same room where you got to pitch. And now we're basically continuing a lot of the conversations that we started during the program. And I think that's a sign of a very strong program where it was the catalyst for starting up all these conversations and relationships that are then like naturally blossoming even after the program's over.
Yeah, no, I'm so glad you said that. For us, we think of the lab as not the demo day that you mentioned, which is my favorite event. I mean, it's lights, camera, action. Everyone's up on stage, 200 people in the room. It's really an awesome event. But we think of that as really not the end of the program, but the beginning of the program, right? Like our 10 weeks is really just to ramp you up, get you connected, get you engaged with those financial institutions. We very much hope and encourage that you continue those relationships well after the program and throughout being a successful company. And what I would say is for anyone who's watching this and thinking about an incubator program, I think before you make a decision on going in, you want to figure out what you want to get out of the program, right? What are the outcomes that you're looking for? Is it that you need the funding? Is it that you need the mentors or the board members or the team support? You're trying to get more to the community? Or is it that you're looking for your product market fit and getting more sales and your customers? And I think what the FinTech Lab focuses on is really helping you understand the use case, the product market fit of those tier one financial organizations. How do you sell into them, or how do you sell alongside them to go to market, or just learn from them on what it takes to be a massive financial institution as you take that your way.
Luke, maybe final bit here for startups are looking to apply to the program. What are things that they should be aware of? I think what would be helpful is like the timeline for applying for next year's program, as well as like what should they keep in mind for having a successful application that gets the attention from the financial institutions that they partner with the program at large.
Yeah, no, thanks for the opportunity, Ankur. It's been a great chat with you today. What I would say is for the FinTech Lab for 2026, so applications are going to open in October 1st. So we open applications and they run till the end of November. Every year, again, we sit down with the financial institutions to really understand what are their innovation priorities. And so every year it's been cyclical on what the current pulse of the industry is. And so I think look at the press release that comes out with the application, see what those priorities are, and think about how does that really fit your business? How are you solving for some of those problems? And with that, the way for you to differentiate is really, again, when we talk on the beginning of the call about differentiating your product, talking about the problem that you're solving, as opposed to how great your technology is. Because people buy solutions, they don't buy technology. And the other thing I would say is just really understanding the financial institutions that are part of the program, who are the ones that you want to spend time with and that you're really trying to meet. Doesn't make sense for you across banking, payments, capital markets. Because at the end of the day, if you make it through the program, you're going to spend those 10 weeks in their room, not with me, but with those financial institutions to really help you find your product. So if you're interested in the program, take a look at those, take a look at the priorities that come out, and really think about how are you solving that in a unique way.
Luke, really appreciate this conversation, going through the innovation trends that you've seen, as well as innovation trends that are likely to pick up come next year. And thanks for partnering with us as part of the program. It was an incredible experience. And I'm hoping that many of the startups in our audience also choose to apply to the program next year. From our perspective, it's just a phenomenal experience. And I think you yourself are a testament to just the strength of relationships here. So Luke, thanks for all the insights here. Really appreciate it.
Ankur, such a pleasure. Thank you always. Tell the team I say hello. It's fantastic working with you guys. Looking forward to more of it.